All right. Well, good morning, everybody. I appreciate you joining us today. It's funny. Over the last year, we've seen a number of government programs designed to assist the restaurant industry with grants and loans. But I think for many years, there's been an offering of tax credits for hiring and employing certain groups of individuals that's really been extremely underutilized within the industry. Joining me today for a partner efficient hire is Chris Woltz, the Chief Operations Officer, as well as Amber Ankele, Director of Service Operations. And we really just thought it'd be a good time to kind of get together, talk about what is known as the Work Opportunity Tax Credit, or WOTC, as it's commonly referred to, and really just give kind of a good outline to those listening in and people in the industry that aren't aware of what this program is and maybe how to manage it, how to get these tax credits and everything else. So thank you both for the time today, and look forward to talking about all this fun stuff.
Absolutely. Thank you, Brad. I'm glad to be here.
No, it's always good. We've had a great partnership with Efficient Hiring. You guys bring a ton of value to our clients. So it's always fun talking about different facets of your service capability. And I guess just kind of digging right into it, Chris, if you don't mind me asking you, could you offer some details on what this program is and really how is it relevant to today's restaurant operators?
Sure. I would suggest a bit of a loaded question, but some history to start us off is it's about a 30-year-old program. It was started in the 90s and has been driven by government legislation since that time frame. It was actually just renewed at the end of the year with one of the stimulus packages for another 5 years. So it's something that is going to be around for a long time. It has been, it's got support on both sides of the aisle, and it has been a great benefit to probably three different parties, right? In terms of when you think about this program. From the government's perspective, the Work Opportunity Tax Credit is a way of getting, certain types of folks that are, I guess you could suggest, disenfranchised or maybe have had harder times finding and seeking employment over the years, of getting them back into the workforce. So you think about, and we'll talk probably a little bit later about the different target groups, but think about folks on food stamps or disabled vets or folks that just generally speaking might have a hard time. The government wants to be able to put them back to work, oftentimes because there might be some sort of governmental assistance that's being used to help those folks while they're unemployed. And so what I would suggest is, the government's perspective is we want to subsidize employers and help them get these folks back into the workplace by providing a tax credit for employing them and then retaining them for a certain amount of time. At the same time, for the employees, again, this is a way of helping them. It's a benefit when you put it on your resume or when you go through screening that, hey, I'm a part of this target group or I'm in this category. It's going to help me, particularly in the restaurant industry where it's hourly folks, high turnover. These sort of folks are definitely highly sought after, particularly because at the same time, the employer is going to get a tax credit, cash flow, and what's thin working capital, thin margin businesses. So it benefits all three parties. Government is able to put these folks back to work. The employer is able to get a tax credit, and the employee, most important of all, is able to reestablish themselves as a contributing member of society with employment, if that makes sense.
No, it makes perfect sense. And I guess kind of relaying into that, being an independent restaurant owner or multi-unit in a lot of ways, if I have, a lot of employees I deal with, are there specific benefits that I would see from working with them or receiving this Work Opportunity Tax Credit?
Sure. So again, we'll share some additional information we'll make publicly available to you and your clients and prospects there are different ways of earning this credit. The very basic level is when you hire somebody. So if I come into your restaurant today and you're going to hire me, you would screen me for WOTC eligibility, right? That's a self-attestation. And ultimately, once that's done, you submit some paperwork to a state workforce agency. And then at that point in time, they're going to determine whether you're eligible or not. Now, where earn the credit, in addition to getting some simple checks out of the way by the state, you have to employ me for a certain amount of time. So at a very basic level, I'll have to work for you 120 hours within my first year of employment. And that is, again, so sometimes that happens in the very first month. Sometimes it happens over a 6-month period. It could even take longer than that. But at a very basic level, as you work that 120 hours, we calculate credit on behalf of our clients and are able to deliver that to them throughout on an ongoing basis. So throughout the year, as it were. So essentially, you put me to work for 120 hours, I earn wages, you're going to earn a tax credit. That can be up to, depending on the target group, about $9,600. But it does vary depending on how long someone works, the target group that they're in, all things that we can certainly talk about.
What we're seeing from today's operating environment, restaurants are just trying to bring as many bodies into the business as possible to cover the chefs, and it's a very competitive environment. So, are we saying that our restaurants able to leverage work opportunity tax credits, and as they're pulling in as many people as possible, and probably a large portion of these individuals might be veterans, or they might be working off a SNAP program, or they might be coming off long-term unemployment that we're seeing, that kind of extended period now. Can we leverage these tax credits as a means to offset the cost of applicant tracking?
Everyone's having a hard time finding applicants, right? I mean, it is a very challenging environment. You are going to have to, generally speaking, you're going to have to pay. Not necessarily. You're going to have to advertise. You're going to have to outcompete, right? You're going to have to be, outcompete your competition. Whether if you're an independent restaurant, you're going to have to go head to head with another independent restaurant, or maybe your QSR competitors or your fast casual competitors, right? And so at the end of the day, that costs money, right? To sponsor on job boards because they're flooded with applicants, right? Highly saturated job boards, because there's a labor market imbalance between there's a high number of jobs and there's a much lower amount of employees. And what we find is that, as you're going and sponsoring jobs, advertising so you can fill these positions, it's going to cost you money. So at the end of the day, on the back end, if you can use WOTC as a tool to drive ROIs into every hire, that is helping offset some of that employee acquisition cost. One of the things is, and again, we've been now partners for several years at this point, between the RASI team and the EH team. One of the things that we've focused on very specifically in terms of delivering value into the space is adding a very specific set of tools for hiring, right? And that comes from, we're going to help you recruit, we're going to help you onboard, right, through a workflow-driven guardrails approach, and then we're going to give you ROI that comes back into that. And it's something that's not talked about quite as much as it should be with an operator, because at the end of the day, what they care most about is applicants. But again, if you can suggest, okay, you may not have 10 applicants, you may have 5. So if you have 5 and one of them is checking WOTC eligible inside of their application, you want that person, right? Because more likely than not, if they're answering yes to, I have been unemployed for 5 months, there's a good chance that I'm going to be able to earn a tax credit by employing them, because you see operators creating incentives for people to stay, potentially increasing their wage ranges after X period of time, or other bonus incentives for staying. That is an easy way for an operator to go and put that person to work and earn a tax credit to help offset that cost, right? Of acquiring that person, knowing they're going to have to compete with the Chili's across the street, right? And we want to help make sure that your client base, our shared client base, is able to do that as efficiently as possible. So our tool set, again, is meant to tie WOTC throughout the whole thing. It's not just a reactive thing. We can use it as a tool to be prescriptive and proactive in the types of folks that we hire.
No, I love it. And I think holistically, what the partnership with the Fish and Hire brings is, especially for our clients now in that competitive hiring environment, from an applicant tracking and recruiting type basis, the responsive rate to be able to beat out, if you know, just to respond to applicants faster, which will hopefully in turn get you more applicants inside the doors for an interview and to complete their onboarding process. But there's a lot of topics we can discuss about today's hiring and employment world. Talking about WOTC or the tax credits, Amber, it was really, Chris mentioned earlier specific people that qualify for these tax credits. Can you kind of dig into who those are, or as we're looking at hiring people, who we might be looking for?
Yeah, of course. So for WOTC, there's 9 total target groups. The most common that you have are the SNAP recipients or short and long-term TANF. Those are the 2 that are the most common target groups amongst pretty much any QSR for sure. Then you have veterans, there's ex-felons, recipients of supplemental security income, long-term unemployed employees, so anybody who's been unemployed 27 weeks or longer. Then the kind of less common target groups are your designated community resident, so they live within a specific zone that qualifies them. There's employees who work with a vocational rehab, within their state, and then the summer youth program. So typically about 10 to 20% of new hires are going to be eligible, and then we see about a 50% certification of those applications. So, and a lot of that, like I said, is driven from SNAP, TANF, long and short term. The long-term TANF is the bigger target group of the two. So that's one, if you can really get people in that long-term TANF, you get a big tax credit for that one. So those are really the 9 groups that those employees would have to fall into in order to qualify for WOTC.
Perfect. And I guess a lot of times if you're going through the hiring process, unless you have a WOTC program in place, I mean, these aren't questions you're typically going to be answering or asking because
Right.
they're not really, I guess, general knowledge type, right?
Yeah, they're not common questions that you would just ask on an application. They come within that WOTC screening, and it's nice within our platform with that whole screening. It just is all there, so they can ask. It's all asked. It's very fluid. It's easy for them to read and answer, so they know, was I on SNAP? It has the food stamp logo there so that it shows them, SNAP, because who knows what SNAP is, right? Like you have then the food stamp logo, so it shows them food stamps. Okay, I was on food stamps, or somebody in my household's on food stamps. TANF, it provides that logo. So it really guides them through so they know what target group that they might be applicable for so they can answer those questions correctly.
Got it. And I know it's funny because talking with our clients and even the individuals we've connected with surrounding industry, there's been a lot of questions about WOTC. I guess we're how to capture them, and I've heard some stories of businesses taking it on, I guess, from a manual process and trying to keep up to date with everything. Could you kind of just walk us through a little bit about what would a manual process look like for WOTC, and then alongside that, how does efficient hire take on that task itself?
Absolutely. It's actually a great question because that does come up a lot. A lot of clients are, well, I can do this. I can screen my new hires. I'll take this 8850 and the 9061. And, God love them for trying, but definitely it's a complex form. It's hard to read. It's tough for employees to read. The questions, it's an IRS form. They're not the most easy to understand. Then they have to take that eligible application and make sure they submit it correctly to that state workforce agency. And that's a complex process depending on the state. Every state operates differently. They accept the applications differently. They require different documentation. So you have to make sure you're obtaining all of that documentation and submitting it, or it's going to kind of sit in this black hole, we'll call it. Like they can just sit at the state sometimes. Then you have to make sure you take and you calculate the correct hours and wages for all those eligible employees. And then that's, in itself complicated. You're dealing with the payroll records. Now you're going to take and put all that information on the report and the correct forms that you need to file those credits at the end of the year. Making sure, you don't dip into last year and you're not going into the current or the following year. You have to be really precise about how you're looking at those hours and wages. So overall, it's complex for employers, to do that. But within efficient hire, which obviously I prefer, because nobody should do WOTC on paper. It's a thing around here. We don't do WOTC on paper. It shouldn't be done. It gives me anxiety a little bit. Chris knows. So within efficient hire, like my palms are a little sweaty talking about paper apps, not gonna lie. Within efficient hire, it's native. It goes through the onboarding. It's asked. A lot of time employees don't even know that they're really in a different section. It acknowledges how we want them to answer the questions at the top of the interview. And then it flows right in and it asks them, has anybody in your family or you've been on SNAP? And it gives them those logos to help guide them. Then if they're yes to any of those, it finishes up with the additional questions that might fall in those target groups. Then internally, we go through and we work those decisions. We process those applications and decisions with the state workforce agency. So there's nothing for the employer to do. We handle all that internally. We handle the additional documentation, and then we produce all of those reports and things that they need at the end of the year for their accountants. Along with their payroll records and some work with our account management team, we really make sure we guide that process for them. So there's just little to very minimal work for the employer to do.
No, that's
There's no need
awesome.
to do that in paper ever.
No, I guess the last thing people want to do, especially running a restaurant, is shuffle paper around, right? It's really in today's
Right.
climate, if you're working at the restaurant, you're pretty much either taking care of the guests, you're cooking food, or you're packing to-go orders.
Yeah. And so you're asking them, to fill out these papers and then submit them all along the way when we can just much, much more easily do that for you.
That's awesome. That's awesome. I guess so. Really, what that comes over to is now we've got the process to get these tax credits. What's the application of applying them? I think of I'm actually coming up on my FSA. I think our health insurance renews at the end of this month. Actually, I have like $1,400 left in my FSA, so I got to figure out how I'm going to buy a lifetime supply of Band-Aids. Is this a use it or lose it type basis? I guess annual basis, or how do we use these tax credits to benefit the business?
No, WOTC has a carry back rule for 2 years and then a carry forward for 20 years. So if you can't use it this year, you can carry it forward. So it's not like it's just going to go away. If it's something you can't utilize in your current year, it can be rolled forward. And part of our reporting system, the way it works with us, is that if that's the amount you're going to claim, we're going to cut you off there, then we can help make sure those accurately roll forward into the next year. So you're not trying to, keep your spreadsheet of numbers and things like that. That's really what we'll do for you.
Got it. So I guess even if you have like one employee that applies for this, maybe on an annual basis, you can kind of continue to build up that I guess the tax credits, and then when you get to a position, you're like, okay, let's use them all, and then you offset any tax, I guess, liability, right?
Yep. Works out well. We have a lot of customers that really kind of do strategically figure out how they place that tax credit throughout their years.
No, great idea. And I guess really the practical application of this, when we're talking about dollars, right, within a tax credit situation. Chris, coming back to you, do y'all have, I guess, with your knowledge and expertise on the tax credits itself, do y'all have like a generalized idea of what type of credit an independent restaurant would see, or what kind of credits customers are earning?
Sure. So I would say, just full disclosure, we typically, when we're talking with clients and prospects, every client's a little bit different, right? Geography, position types, ultimately size, right? Hiring velocity, all play a factor in how and ultimately what we typically see from credit earning potential. But again, across our entire client base, which is over 2,000 at this point, we've processed several $100 million worth of credit, right? So we've got a lot of data that we are constantly looking at as benchmarks for what to expect, right? And that's all the way, it's a funnel basically, where you start I hire a certain amount of people, certain amount are eligible, certain amount of those are going to be certified by the state workforce agency, and then some other percentage are going to actually earn credit. Right. So let's say, just in a practical example, to get to a credit number, kind of what we typically see, let's say you hire 100 people in a given time frame. So let's say, we just finished the first quarter of the year. Well, I guess we're already heavily into the second quarter, but man, the year is flying fast. But what I would say is, if let's say I hired 100 people in Q1, and ultimately I would expect about 10 to 20% of those to be WOTC eligible. For argument's sake, let's just use 20% as a good round number. So 20 of those 100 hires would self-attest that I fall into one of these target groups, one of the 9 that we've talked about. From there, our team would submit those applications to state workforce agency in the respective state, and we would expect those to yield about 50% are going to be certified. So of those 20 eligible employees that we submitted to the state, about 10 of those are going to certify as eligible, as actually certified. State says, you said you're eligible, we certify that you are eligible. From there, then there's ultimately a credit earning component to this. So beside just the conversion rates of the units, metrics, ultimately there is how much would I expect a given certification to yield from a value standpoint. And what we typically see across our entire customer base is about anywhere between $800 and $900 per certification. So back to our example, if I have 10 people out of 100 that are ultimately certified, then over a period of time, as they earn out, as they work over their 120 hours, as they reach their caps, we would expect them to, all those certs, that is 10 certs, to on average have a $900 value, which in total is about $9,000 worth of credit. So you can imagine when you get bigger groups, bigger volumes of hires, those numbers can be very, very high, right? In terms of if I'm a 10,000 employee operator that's across 4 or 5 different QSR brands with maybe some independent sprinkled in, you might ultimately see several $100,000 worth of credit being earned for hires in a given period, if that makes sense. So it's again, I would suggest it depends. I think a lot of WOTC providers out in the market are willing to over-index. I think what we really emphasize is good process, right? We're going to screen 100% of the hires that come through the door, right, through our native question and answer inside of our onboarding, right, which is integrated with RASI. So you're not missing anything. From there, we're going to make sure every single application gets submitted within the 28-day window. We're going to then go get all the decisions, and we're going to appeal on your behalf when you get denied certifications, just to make sure that we're doing everything we can on your behalf. And then we're going to collect all the payroll from the RASI team to make sure that we're calculating every single dollar worth of credit. Along the way, while we've talked earlier in this discussion about operators just needing every body that they can to work, we know that this is a competitive market, that wages are changing, that we see minimum wage going up in certain places. We want to do everything we can from a reporting standpoint to make sure that the operators have optimization reports and things of that nature so they can ensure people are reaching their maxes and their caps and optimizing their credit. So what we're going to do is kind of a holistic process of getting to that, what I call $900 per certification, or that $9,000 of total credit on those 100 hires. So there's a fair amount of pieces that go into it. Our perspective is we're going to be our clients' partners and making sure that they don't have to deal with this, that we take care of everything. We give them actions where they need actions, and that we help ultimately optimize this credit, something that is underutilized in our country as a whole.
I think what it always boils down to is people always, the way I get talking about RASI is, hey, all of this sounds amazing. So what does it cost, right?
Sure.
I think the beautiful thing about working within the WOTC environment and our partnership with Efficient Hire is really it's just contingency based. So if you're not getting tax credits, then there's no fees surrounding WOTC, correct?
That's right. And it's a great point, because oftentimes what we'll see a client suggest or a prospect suggest is, it's just a lot of effort, can't devote the time to it. And what we really suggest is, how Amber outlined earlier in the conversation, we take care of everything. The only thing you have to do is use our system to hire people, which you're going to do anyway, right? Because you need to be compliant. You need to make sure you get all this information to payroll. WOTC is just a component of that, right? And then on the back end, particularly considering the tight relationship that we have with RASI, we're collecting all the payroll on the back end. So at the end of the day, the only thing a client has to do is sign up for the service. We're going to handle everything on the back end, go about business as usual, and then we're going to support our clients along the way with insights, reporting, ultimately year-end credit reporting for their taxes. So it's light touch from our perspective. And obviously we do all the back end work on our side, but that is all on us so that we earn that contingency fee.
Perfect. So I guess really what we're looking at is it's a use it or lose it type scenario. You're either using Efficient Hire to get these work opportunity tax credits, or you're losing out on its potential. I mean, as a business, we're hiring people right now as it is. So
that's right.
Might as well implement something where you can get those tax credits and offset, the onboarding expenses or just the cost of recruiting.
Exactly right. At the end of the day, it's driving ROI into every hire.
Couldn't agree more. Well, awesome. Well, I think that definitely brings a lot of insight on work opportunity tax credits to the table. Definitely anybody listening in, you want to learn more about this, reach out to your RASI advisor, reach out to me. My name is Brad Bertram. Reach out to our contacts at Efficient Hire. We can definitely discuss this further, make sure that you're fully aware of the potential you have within your own business, and let us know how we can support your goals the best. Appreciate your time, Amber and Chris. Thank you both for joining us today, and all listening in with our RASI tips here. Thank you again. Look forward to catching you next week. Have a good day.